time until this GTC, we've all made the assumption that this is going to happen at large data centers, and that is who the company was serving. Probably the hidden gem in his comments were that only 60% of the chips that they're selling right now are going towards those large data centers. But then corporations who are trying to figure out maybe developing some in-house, uses of this are now buying their products. And I think that's really interesting and kind of takes a little pressure off of the company because it isn't solely dependent on, what CoreWeave and Microsoft and, the rest of the gang are buying.
Perhaps it's not just about GPUs, CPUs, even LPUs. It's actually about the software side. And how much did you pay attention to NemoClaw, for example, the way in which it seems as though Jensen Huang's trying to get in on the enterprise desire to have safe agentic AI?
Right. And I talk to a lot of people in my job, and I have heard more and more companies rolling out agentic services for their employees, making them more productive. Now, what the spending on that is going to be, it's anyone's guess. I am going to point back to the .com era, which it wasn't just about pets.com and stamps.com and all that kind of goofy stuff, but rolled into that was the Y2K conversion that a lot of companies were undergoing. And one of the flaws in thinking by investors during that time was that spending was going to go on in perpetuity. What companies were spending on IT for that Y2K conversion was thought to, it will bloom and blossom into other areas, and it didn't happen. And I think this is a warning for this technology as well. I've seen some really goofy estimates that, companies are going to be spending on this, in perpetuity in the trillions. And that's really not how technology works. People want an end to it, and they just want to use the build out, and they just want to use the technology for productivity. So investors beware.
Well, how therefore should the warnings to investors be about, in perpetuity, the pricing of memory going ever higher? At the moment, we seem to be getting endless calls that this is going to be at least until maybe 2030, but there's got to be demand destruction, and that's going to be focused on in Micron's numbers after the battle.
Exactly. And Micron is a really great example of this, right? Because they had been participating in an, I love to say this word, oligopoly of about 6 companies that were making NAND and DRAM memory, right? And what would happen was somebody would bring on a new supply, and that would just kill NAND prices because it was kind of a commodity. Well, even though high bandwidth memory is, a gating factor now for a lot of these AI build out, at some point, we're going to go back into that boom bust cycle, even though it's exotic and in demand. So I think that Micron just announced that they're adding capacity to a Taiwan plant, and look for the other players in this area to start doing that as well. And again, it's not going to go upwards to the right like it has been, the demand or the pricing, because we're going to have supply demand here entering into this. And these are even a smaller oligopoly of about 3 players right now that are making this high bandwidth memory.
How much of these stopped pricing in already the enthusiasm here, Kim? Because we're seeing Micron rally into its numbers. Are people already expecting just killer results? And what more can the CEO really talk about?
Absolutely. I mean, they are expecting killer results, but the physical world is going to impact their results too, because you can only ship what you make. And they are running up, everybody in this industry is running up against, supply problems. And you can see that as the chip builders are complaining about it. So I am very enthusiastic about Micron for the long haul. I think they're a great company. But in the short term, I wonder, can they ship enough to satisfy investors' demand? And I guess tonight we'll see.
We've also seen perhaps a slight quietening of the anxiety around the AI trade, just from can we afford it? Will it really come? Do we need this level of data center build out perspective, Kim? Where is the anxiety right now for you when it comes to the still optimism we see baked into the stock market?
Sure. Well, I have some real questions about how much capacity is needed. While I'm a huge bull on I understand what it can do. I am not still convinced that large language models are the way forward forever and ever on that. I think they've done wonderful things in solving natural language processing, but I don't know that that is what we're going to do in, let's say, 5 years. So my fear still is that we are building investors are building their expectations on what they know today. And I think things can change very, very quickly with innovations like, I don't know, OpenClaw or whatever it is, where I'm sure where companies are using less processing power and getting more bang for the buck.
Unpredictability in the stock market, that's exactly what Howard Marks was calling out today when it comes to AI. Kim Forrest, CIO at Boca Capital Partners, great to have some time with you. Now, coming up, we're going to be speaking to Tarek Mansour, Kalshi CEO, co-founder, as after Arizona filed criminal charges against the prediction market platform. More next. This is Bloomberg Tech. Arizona has filed criminal charges against Kalshi, accusing the company of operating an illegal gambling business. Bloomberg's Tim Stanovic joins us now, the Kalshi co-founder and CEO. Tim, take it away.
Hey, we're joined by Tarek Mansour. He's the CEO and co-founder of Kalshi. Tarek, good to see you. Thanks for joining us on this. Look, even though other state regulators have taken steps to crack down on what they say is unlicensed betting on Kalshi's site, Arizona appears to be the first to escalate to criminal charges. What is your response to these charges?
Look, I mean, these charges have nothing to do with gambling or demerits. If it was about gambling or demerits, they would let the judicial process find its course in the federal courts. 5 days ago, on Thursday, Kalshi filed suit against Arizona in federal courts on the merits on whether Kalshi is subject to exclusive jurisdiction of the CFTC. We're confident in our position and wanted to let the court process play out. And instead of letting that happen, the Arizona Attorney General decided to subvert the judicial process and weaponize it and go to state court and file these criminal charges, which we view as meritless and baseless. We see this as a total overstep, and we look forward to fighting it in court.
Well, experts are saying this could be the first of many charges such as these from other states too. How does it change your legal strategy?
Well, this is the whole point of federal preemption. So this is not about gambling. The charges that the Attorney General filed are not about gambling. They're not even about sports only. They're about prediction markets writ large. It's just, attacking the entire business model. And nothing prevents from the same Attorney General or others from filing same criminal charges against derivatives markets writ large. They could file the same exact charges under the same analysis against CME or ICE or NASDAQ. And that's the whole point of federal regulation of these financial exchanges, is to prevent this sort of chaos and these sort of attacks on these businesses that could be political in nature or other. And that's a very important distinction.
Well, I read the charging document from the Attorney General. It has 20 charges. They're mostly about betting and wagering when it comes to sports. There's some election stuff in there. Would you ever consider limiting your business in Arizona or other states to things that these AGs don't seem to have problems with, like economic data, the price of Bitcoin, what markets are going to do, predictions around those things?
Look, I mean, the AG also claimed that we have war markets, which is incorrect. It's either flat out a lie or it's misinformed take, which is unfortunate for someone, filing criminal charges against the company. What's more important here, again, is this is not about the merits. If it's about the merits, let's let the judicial process run its course in federal courts. This is about something other than the merits, which is what I'm focused on. I don't know what the AG is focused on, but, she is up for re-election. It did some press. It does seem to be making some buzz. But what I'm really focused on is building a great product for our millions of customers, out of which close to 400,000 are in Arizona, and fighting any of these baseless cases in courts, which we're going to continue doing.
So you're fighting the cases. As I mentioned, Arizona is not the only state to take issue with your business. What happens ultimately if courts do side with states? What does it mean for the future of your company?
We believe in the rule of law, right? We will always abide by court decisions. The law applies to us, but it also applies to the government, including state governments. And that's a very important thing, right? This is really not about Our business model, again, if it was about our business model, we would be focused on the federal courts and the lawsuit about the merits. This is a broader attack, and many states have sided with us and have granted us a preliminary injunction agreeing with our legal analysis. We have spent 4 years getting regulated by the federal government, and we have a federal government in the CFTC that is coming strongly in favor of our position. Filing these charges is a total overstep and an overreach from an AG that's up for re-election. And we find that unfortunate, but we will stay focused on what we do best, which is.
With an online degree from the University of Tennessee, you can be unstoppable. We're here to be your partner in that journey. Wherever you are, whatever your schedule, we'll help you turn your dreams into reality. Because with Vols Online, you can do virtually anything.
All right, let's get started. Let me share my screen. Okay, and they want a delectable squeeze up? I'm excited. You'll know. Deliciously delectable delectables. Squeeze up. You found it then.
Of course I did.
The CFTC stands, and we know where Mike Seelig stands on this. We don't know where courts stand on this, and I'm wondering if we see a state like Nevada, for example, block access to your business, what will you do? Will you continue to operate, or will you say, okay, we're not going to operate in Nevada?
Well, first of all, let's get to that point, and we'll have to make a decision as a company what we do. What I can reiterate is we will 100% abide by the law. That's what we will do as a company. It's always been our position. That's why we spent 4 years getting regulated up front, regulatory first as a company, and always abide by the law. But what I always say, the law applies to us as much as it applies to the government. And when government oversteps the law and goes out of bound, we're going to fight that in court, which we look forward to.
How long does that process take? Because it seems like there's a regulatory limbo happening. It's almost like your legal team is going to have to play whack-a-mole with all these states that are filing suit or bringing criminal charges. How long is this going to take?
And gladly, we have a legal team to handle these types of things, and we're going to be focused on. And maybe it's a question for them. I mean, look, whatever long it takes, we're going to fight for prediction markets. I spent 8 years building this company, 4 out of which are getting regulated up front. I really believe in this marketplace. I'm very excited about the growth that we're seeing. It's one of the fastest growing companies in America right now. And so what I'm going to be focused on is keep building a great product. And that's what's sort of most important for me. The more important sort of question is, when it comes to this is not really about, whether this is gambling or not. It's not really about state versus federal, which are both coexisting and both growing, both models. This really is turning into sort of some special interests that like the status quo. The status quo has worked very well for monopolies, but not for the consumers that are flocking to prediction markets right now, which we're going to keep fighting for.
Tarek, there is this perception, though, that people think this is gambling. An Ipsos survey from just a few weeks ago, for example, shows 61% of adults say prediction market trading is closer to gambling. 8% say it's closer to investing. So there is this public perception.
Loss on the first one.
Say,
Swing back. Rotate.
how do you battle that? Like, how is this not gambling?
I haven't really looked at these.
I think on the second one.
The thing I will say is there's always been a battle of whether financial derivatives are gambling. Grain futures were called gambling in the 1800s, and there was a Supreme Court decision that said even though there's speculation, these products have are structures of financial markets and thus are going to fall under financial market jurisdiction. So I always say this, whether something feels and looks like gambling doesn't necessarily make it gambling. Speculation exists in all financial markets. If we're going to take a line that speculation is gambling, then the stock market with retail participation is gambling. Then buying options.
Should have target the value here.
gambling. And retail buying crypto is gambling.
Yeah.
The more
Here,
important line and the historical line,
130 ticks.
there's law, but also, you know, if you think about it societally, is the business model a gambling business model, which is a model where the revenue of the business and the profits are equal to the customer's losses, in which case the incentive is to promote more losses and block the winners, or is it an open, free, and fair marketplace where people can enter in and out freely and transparently, which is a financial exchange, which Kalshi falls under.
Tarek Mansour, Kalshi co-founder and CEO. Tarek, always good to speak with you. Thanks so much for joining us. Caroline, back to you.
Fantastic interview, Tim. Thanks for bringing in. Now, coming up, the US government defends its blacklisting of Anthropic. Details next. This is Bloomberg Tech.
More volatility on the VIX.
The Trump administration is dialing up efforts to oust Anthropic from all federal agencies, saying the US government has reason to question whether the AI firm is a trusted partner after the company asked for limits on how its technology was used by the Department of Defense. Let's get the latest on this saga. Bloomberg's AI reporter Rachel Metz. This is now not just in the public court of the media, this is going to the actual court for a fight out.
Yeah, so as part of this fight between Anthropic and the federal government, Anthropic's filed 2 lawsuits, and the one in California has a lot of action happening. Yesterday, the federal government said, we are going to fight. We think that Anthropic's technology became an unacceptable risk, essentially, to the military because Anthropic would not agree with a change to its contract that the military wanted earlier this year.
Emil Michael, he's the US Undersecretary of Defense for Research and Engineering, who has really sort of been the public voice of this. He's talking about
It's been a great target.
around by Anthropic during negotiations.
100 ticks. I could have 260 ticks.
Remains within federal.
Got lost from this. Looking for a rotation.
The technology works. Grounds for this rate.
It's been puking since yesterday's FOMC.
That's really alarming something, right? Like the idea
And
you could be using technology in a warfighting situation, and then the
higher inflation this year because of the war in Iran.
They said in a statement, Dario Amodei, Anthropic CEO said in a statement in February, the company has never done something like that. And really what the company wants is just some specific limits on how
We have volatility right now. Before the open, 10 minutes until the open.
be able to use that technology for any lawful purpose. Something that Anthropic it alleges refused to accept due to its usage policies for cloud.
Really, they're talking about their long-standing commitment to harnessing AI to protect our national security, is what Anthropic's saying. How is this affecting or could affect the business briefly, Rachel?
It sort of could affect it in 2 different ways. On the one hand, this has seemed to be a huge boost for Anthropic, especially as a consumer product, which typically it is not thought of as a consumer product. It's chatbot Claude, but the app has gotten extremely popular, big boost in popularity. And at the same time, the company says this could be hundreds of millions or even billions of dollars in damage. And it cited in a court filing last week some specific ways that's already starting to harm the company financially.
Rachel Metz on the latest with Anthropic and the Pentagon. We appreciate it. Now, coming up, we'll speak to the former GitHub boss about the latest fundraise for his current company, Expo, and the market for offensive cybersecurity. This is Bloomberg Tech. Welcome back to Bloomberg Tech. We check in on these markets, which in many ways are in the of a geopolitical storm, the macro storm, with it off by 0.5% on the Nasdaq 100. More broadly, stocks to turn lower and the S&P 500 because Brent crude is on the higher side, more than 5% higher. That the conflict with the Middle East, within the Middle East, seems to be, well, worsening rather than coming to any near conclusion. We're currently seeing therefore inflationary pressure in the key concern in the market. PPI readings coming in today showing that there's inflation pressure even before the conflict erupted some 19 days ago. And we look towards what the Federal Reserve will do in response. That means today we're not expecting any change in rates, but certainly a conversation to be had with Fed Chair. Let's move on and have a look at what tech stocks are doing, because in amongst NASDAQ 100, which is down, we're actually seeing NVIDIA trying to do its best in the green. We're up 0.3%. Now, this is that we have some extraordinary dictations coming from the CEO, Jensen Huang. He's talking about this moment in open call, the fact that we've got a new chat GPT on our hands in the world of agentic AI. It is driving, those words driving Chinese stocks in particular. Minimax up almost 20% as they release new agentic AI tools for its user base. Uber is up almost 20% as well. Look, these are record highs at the moment due to open call frenzy has beset the entire Chinese world alike. Look, let's stick more broadly with Chinese stocks, because another giant has been betting on the use of open core style agents is Tencent, which actually just released its earnings results, showing the company plans to at least double its investments in AI in 2026. This is say here in New York for the time being is Bloomberg's Asia stock reporter, Yukyun Lee. Great to have you here for a couple of months. Yukyun, talk to us a little bit about Tencent and what they said on the numbers.
Yeah, I think there are three key takeaways from their earnings this morning. I think number one is this top line growth. It said 13% sales growth for the December quarter, which is its fifth straight quarterly results, is posting double-digit growth, and that was in line with expectation thanks to its advertisement and game point. So I think that's the first key takeaway. And secondly, and more importantly, is this AI investment. The company said it's going to double its AI investment, and that's going to cause some share buyback. So companies going to scale back the share buyback so we can bankroll the AI investment that's going to at least double. A third takeaway is actually the company's mention of the open cloud. The company mentioned how it's going to use open cloud in terms of the company's AI strategy, including the open cloud. The company's CEO pointed out that open cloud is actually an inspiration, great inspiration for the company's WeChat-related ecosystem, and it also said it's helping Tencent leverage its cloud computing. So the mention of the open cloud, top line growth, is doubling of the AI investment. These are the key takeaways from this Tencent earning this morning.
It's so fascinating because here open core is sort of a developer phenomenon, but in China and Asia, it's a consumer phenomenon. This desire to see agentic AI, autonomous agents used in your personal life. How are other giants like Alibaba thinking about this as we look towards their earnings coming out?
Yeah, absolutely. So Alibaba is reporting their earnings on Thursday before before the market U.S. time. I think there are several things that investors are looking forward to. I think number one is investment plan on and the monetization plan for its artificial intelligence. Overnight, we heard from Alibaba that it's going to hike the prices of its own AI storage and computing products by as much as 34%. And investors cheered the news, sending the stocks up as much as 4% in Hong Kong on Wednesday. So investors have been looking for answers on how the company is going to monetize the AI investment and justify the massive investment they are spending on the AI. So that's more details on this AI monetization plan is definitely going to undermine investors on during the Alibaba.
in order to better serve those customers and to very quickly further develop our product and go to market.
Okay, so what's so fascinating about your tool is that basically agentic AI is a force in terms of our defensive posture, but it's also a force in terms of our aggressive posture. The fact that people can fight back, and you're using in many ways this the ability to find vulnerabilities ahead of bad actors. How are we seeing cyber attacks more broadly scale in this moment? How much is there an aggression from those that are wanting to do ill?
Absolutely. So attackers will and are already using AI. But the good news is that defenders can do it too. By thinking like an attacker, our agentic AI system can find the flaws before the bad guys do. So the danger is not really AI itself, but the danger is defending modern systems with yesterday's tools.
Talk to us about what we're seeing in terms of you beefing up the ability to scale. Is it about people? Because many in this moment might say, well, with the rise of agentic AI, you need less talent. You just can empower the talent you already have.
It's both. It's absolutely. We already have some of the very best human hackers in the world working for us, as well as a fantastic go-to-market team. Really, we have got the combination of both AI talent and security engineers. However, we also need to bring the product to market, and the go-to-market effort is still very much a human-led activity. A lot of the money will also go candidly towards inference in order to speed up our development.
Where are you looking for that sort of compute? How are you managing to ensure you've got the right inference power when you need it?
So we actually work with all the frontier labs. All of them give us special access to early models, and that allows us to always be in front of the very latest developments. We also, of course, as with very pretty large consumers, have special deals with the large hyperscalers.
Okay. You are so fascinating. Expo is clearly fascinating, but your background as a computer scientist professor at Oxford decades, the fact that you helped build GitHub, Copilot as well. When we see this further around agentic AI, when you see the hype that's happening worldwide around an open core and an open source model that can revolutionize personal AI, how does that make you feel? How real do you feel this moment is?
It's an unbelievable time to be building. We're in the middle of a new revolution.
And the open market is puking.
It's going to be much bigger than that. So personally, I actually feel
Market did not like that news yesterday from JP with the Fed's FOMC.
Briefly, you're optimistic
Inflation.
rather than any concerns, worries, security issues.
The good news is JP assured us of no stagflation.
What we can do for a human, and that's certainly true in cybersecurity. We've got one of our customers, Cessna, sometimes called the Google of the Czech Republic. They've been using our system for over a year. And one quote from one of their engineers stuck with me: every Expo agent is like a new team member. In security, we're vastly constrained by the scarcity of talent. And so having the ability to suddenly scale and do all the things that we know we should be doing, but we're not able to do before, that's fantastic. And I believe that the same is true in many other fields of human activity.
Good, Jamal. Great to have some time with you. Expo, CEO on the fundraise. Coming up, we're going to speak with Gradient General Partner, Aaron Shirazi. That says the company raises $220 million for its fifth round, or its fifth fund, in fact. This is Bloomberg Tech. Gradient Ventures, well, it's raised $220 million for its fifth fund, doubling down on its strategy of backing the next wave of AI founders at seed stage, early stage. Now, with its latest raise, the firm now manages almost $1.2 billion across its funds. Pleased to say that we're joined by Darian and Shiraz, its Gradient General Partner. And so, do we move away from any of the learned performance already, or do you double down on the conviction that you already have? Is it still about generative AI and the tooling?
Thanks for having me. Yeah, I mean, we have been investing in AI since the very beginning. And then our focus has really been partnering with founders at the earliest stages when founders are really starting out with a brand new idea. And we've backed hundreds of companies, and we've been fortunate enough to partner with these companies from the very beginning, some of which are in an apartment or are founders that have never even been in business before. And our focus is on helping them scale up and really find the next round of funding and to really partner with these founders all the way through IPO in some cases.
I mean, you've been doing this since 2017, since before ChatGPT, since before AI got cool, dare we say it. You've backed, 500 AI founders already. Talk us through the wins that you've already seen, because look, the LPs need convincing at this moment. Where were you able to show your prowess to those to come back and reinvest with you?
Yeah, I mean, I think over the course of the last 10 years that we've been investing in AI, we've seen the number of companies that come through our doors really accelerate and increase. We used to see about 100 companies in AI per year, and we were sort of the oddball venture fund that was really, really niche and looking at really technical people that were researchers or people that were not necessarily focused on building big businesses in the eyes of a lot of other venture capitalists. But we saw that the ChatGPT moment was going to come. We saw that the Transformer paper, which came out a month before Gradient launched, was really going to be the epoch moment for AI. And my partner Zach and I, we saw that the ability for people to use these models as sort of an intelligent buddy or an intelligent co-pilot was really going to be the future of the internet and the future of technology. And we partnered with these founders. Now we see 2,000 companies a year come through our doors and pitch us with some new AI technology or AI capability. And we have to pick about 10 to 15.
I'm gonna rotate back up because the VIX is currently below the POC right now. Let's see if we can engineer more liquidity for this. I just don't see it dropping here. I just want to get a better entry.
Renditions or individual models that are for specific tasks.
What's also got more difficult is
For this P, this VIX,
sort of see, was it billion that Jan
VIX to it's ranging within
3 billion and
sea level.
Mira Marathi raised extraordinary fund. People are calling these like mango seeds, avocado seeds, Zed loves to say. How can you compete?
So that's
This place is above value here.
that there is a bubble in certain parts.
Equities are just they're gonna start puking.
Model companies, contenders to OpenAI, contenders to Google, contenders to XAI and Anthropic, and those are companies that we don't.
Just broke even on this, did not get an entry. Rotate back, but
and those seed rounds tend to be really well priced and
VIX is still in the range.
Average $3 million check.
It's in the range of high sell volume, but
we actually don't see the valuation issues in the areas that we want to focus in when it comes to AI. When it comes to a lot of these other companies that are raising $1 billion here or there, it seems as though those are a lot of venture capitalists or investors that want to chase the next OpenAI. But realistically, the moat at the model layer is just capital. How much money can you raise? Because you buy data and compute. And so where we focus, the valuations are favorable and the round sizes are favorable. And we believe that will continue.
What is it like in terms of diversifying your LP base? Because it has a very interesting story, Gradient. It came out of Google, but then you brought on external money. Does that change the way in which you have to invest? Because lots of people have different strategies of why they're coming to you with their money.
It was extremely challenging to raise from LPs, especially in this climate. I mean, we're very fortunate that we were able to get it done in about 9 months. But before, for our prior 4 funds, Google was the single LP, and they've been an incredible partner. I don't think we could have launched an AI seed fund in 2017 when everyone was looking at crypto without the help of Google. And so now I think we decided we wanted to diversify our LP base mainly because it gives us a lot more capabilities. We have partners in the LP base for our companies, and we also wanted the ability to sort of scale up our capital base and have that flexibility. But it was challenging because a lot of people haven't seen liquidity, especially in the institutional LP network. Fortunately, we found LPs that believed in our vision and mission and wanted to partner with us over the long term. And now we have a collection of not just Google, but many other amazing institutions including companies like Mercado Libre, which we're very closely partnered with, as well as a number of other insurance companies, institutions, and foundations. And so I think that given the climate, it is challenging to raise, especially for a seed fund, when you have Andreessen and General Catalyst raising $10-20 billion funds. But I think we've been able to articulate our strategy in focusing on the areas where there isn't a bubble, when valuations are favorable, and where we can partner with these founders when it's just an idea and mature and grow with them.
Equity indices built on opinions? That's the old way. The new way is Bloomberg Equity Indices, built using transparent, rules-based methodologies that are more responsive to changes in the markets, powered by 450 billion daily data points, and backed by research from hundreds of global experts, delivering benchmarks driven by the markets, not opinions. Bloomberg Equity Indices. Get evolved benchmarks for today's equity markets.
Weaker bears here and more aggressive, stronger bulls coming in here. I'd like to see a rotation. I just should have gotten the inducement here. This manipulation. That would have been a good entry. I guess just any of these bull candles here.
Coming up. Disney's new CEO takes over as the media landscape shifts.
Value. That's what I'd like to see here.
Bloomberg Tech.
Where can I find an entry?
Disney's annual shareholder meeting is today, and it runs
Entries.
tomorrow. Set to take over as CEO from Bob Iger, and he steps in.
The initial balance to form.
Performing stock and a media landscape stock. Chris Palmieri, who needs
It's just leaving. It's getting right back up.
Came on in November 2022, and the stock has only gone up 9% compared to 70% for the S&P, and huge moves for Netflix. What does Justin lose to an investor base today?
Well, Gamaro is coming from the theme park business. That's where his whole career has been. So we don't know to what extent he really understands the TV business and the film business that is still so critical to Disney. And there's just been a movement out of these stocks. The streaming businesses haven't been as profitable as people hope. The traditional TV channels are just losing viewers and advertisers. So Gamaro has to articulate a strategy for that business that we really haven't heard from him.
Yeah, I mean, he's got, of course, Dana Walden still on board when it comes to chief creative officer and all things streaming, movies, that sort of IP. But he has done deals. He's got into Epic, for example. How are we likely to see him bring all of these clustered sort of assets together?
Well, what we get a sense of his strategy is that he sees, coming from the parks business, he's got that direct connection to the consumer. And so he sees the Disney Plus service as a, direct consumer service, and a way to tie in, say, the games like Fortnite, the Epic investment, and it's going to be a sort of a Disney universe. And he's going to put this all, sort of better, more connections directly with Disney fans who are, as we all know, rabid and money spending consumers.
We'll see what he does with tech, AI, VR, AR, and the like. Bloomberg's Chris Palmieri watching that shareholder meeting. Thanks so much. Now, let's talk about the FCC chair, Brendan Carr. He is waging what he calls a crackdown on fake news, as the Trump administration leans more heavily on regulators to challenge media coverage, raising new questions about the FCC's role and reach. Bloomberg's Kelsey Griffiths takes a closer look at Carr himself, his rise within the administration. It's today's big take. It's a fascinating read, and it all starts with how basically a lot of Georgetown alumni were amazed to hear that apparently they'd gone to university with Brendan Carr, and they didn't realize he was not a big guy on campus or a big personality before the Trump administration.
That's exactly right, Caroline. I spoke with some of Brendan Carr's former classmates who were shocked to realize in hindsight that they even gone to university.
This week.
Such a contrast to the man we see today who has become this flamethrower for the Trump administration. That's really in contrast to his kind of shy, quiet personality that he's had over the years. So we've really seen a change in in his demeanor and the way that he communicates publicly as he's really stepped into this role as Trump's media enforcer.
Take us on that evolution then of him, the personality, the man, and the roles that he sort of almost said Gump-like got him into this place with the FCC.
So I've covered Brendan Carr since 2017 when he was a commissioner. And I think it's been really interesting to watch. He has always had a really congenial relationship with the press. Even now, he always stops by the press table at the FCC's public meetings, speaks with us, banters, and I think that is sort of in contrast to the big swings that he's been taking in the last year or so against what he and Trump like to label as fake news.
He must have had to grow quite a thick skin. Just thinking of the fallout online, the spot for famous comedians and the like. Just how does he serve the administration agenda at this point?
Brendan Carr has very much taken the position that whatever happens in the media, whatever fallout happens in the media, is not really his problem. I asked him what it was like to publicly contribute to Jimmy Kimmel's temporary cancellation and then to face a lot of blowback for that. And he says he doesn't really care. He tries not to pay attention to the negative headlines. And when he does see them, he kind of chuckles. So I think he kind of adopts that similar attitude. All news is kind of good news.
See if he's reading your piece too. And those Kelsey Griffiths, it's a great deep dive and a great big take. I urge everyone to go online and take a look and on the terminal. But that does it for this edition of Bloomberg Tech. You do not want to forget to check out our podcast. Find it on the terminal as well as online on Apple, Spotify, and iHeart. From New York, this is Bloomberg Tech.
Private credit is when investors finance
POC level.
flexible tool that provides critical funding to businesses of all sizes. That money is then used to provide capital that helps businesses grow or navigate challenging times. This structure supports economic stability and helps companies keep people employed, production running, and long-term investments on track. To learn more, visit MFAOs.
Check it at the value level.
Newsmakers and market movers. This is The Pulse with Francine Lacqua.
Good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in Paris for the Bank of America Global Investor Summit, and these are your top stories. European natural gas prices soar more than 20% after Iran damaged the world's biggest LNG export plant. President Trump tries to stabilize markets by calling on Iran and Israel to de-escalate attacks on energy assets. And the Fed and the Bank of Japan hold rates with rising concerns over price pressures, while the Bank of England and the ECB are expected to follow suit later today. Of course, we discuss all of these topics this hour with guests including Vincent Mortier, the Mundi Chief Investment Officer. We speak also to Richard Clarida, the former Fed Vice Chair, and Katie Koch, the chief executive of TCW. Now, if you look at the markets,
Massive rejection.
slumping after this fresh surge in oil and gas prices seem to be intensifying concerns that the war in the Middle East will stoke inflation and hit growth. Again, the sell-off comes as Brent extended gains from the start of the conflict to around 48%, climbing over $114. You can see currently 115.52. And then, of course, the other big story is not only what we're seeing in LNG prices and gas prices, but Fed officials also continue to expect one rate cut this year, though Chair Jay Powell emphasized that to resume lowering rates, they need to see progress in reducing inflation. So let's begin with Iran damaging the world's most important LNG export plant in Qatar after Israel attacked a giant gas field in Iran. Bloomberg's energy reporter Anthony Di Paola is in Dubai. Anthony, first of all, good morning. And what do we know? I mean, do we know how much markets will be affected by these attacks overnight?
Yeah, well, already oil has shot up. I think we were past 113, 115 area, and gas was also rising in Europe. So, it's the fact of hitting some energy assets. We saw that natural gas infrastructure hit in Iran yesterday. The Iranians immediately came out with some threats against specific facilities in the Gulf countries. all of them linked with U.S. Joint venture
Lost
partners.
there.
And we see
Even
those
here.
utilities being hit
Lost.
overnight. One of the biggest ones overnight was the Ras Laffan LNG complex in Qatar. There was some damage there, particularly to Shell's Pearl GTL. That's a gas to liquids plant in Qatar, which sustained considerable damage, and
short
facilities
this.
there as well. And just coming in now, we've seen reports
Last attempt.
a drone hitting the Samref refinery. That's in
Anything here.
Saudi Arabia's
This liquidity.
That's a joint venture plant between Saudi Aramco, the state oil giant, and ExxonMobil. And that hit on Yanbu, which again, as I said, is on the Red Sea, Saudi Arabia's west coast. That's the first time during this war that we've seen a hit on an Aramco facility on the Red Sea. The Red Sea is the key export point for Aramco's crude now because they are shipping it across country on a pipeline and sending oil out through the port of Yanbu, and those refineries along the Red Sea coast are also pumping out diesel and sending it out to markets like Europe. So it's really a key area for Aramco's continued ability to serve the global market. So this is certainly an escalation in the attacks on energy capacity, Francine.
And so, Anthony, how much are markets now pricing in long-term energy disruption as war
We
continues?
didn't trail it. We're about to get wrecked.
Yeah, I mean, we've seen oil hovering around the $100 mark before, so markets were not pricing that in. We've seen that jump today as they react to some of the news. But if we are seeing, and if we are going to see sustained damage on facilities there, it stands that prices could go up even higher. Right now, where we've been is that traders have been watching the Strait of Hormuz, which has been closed to most traffic, cutting off exports out of the Gulf. And they've been watching that for the potential to reopen quickly. And they've been watching the state of the assets in the Gulf. So if energy facilities are not damaged and they can quickly come back into production after the Strait of Hormuz is opened, that would contain prices. But if we're seeing damage and a longer closure of Hormuz, then we're going to see prices keep ticking up, being under pressure as markets lose supply and potentially lose supply for a longer period of time. So that will be a lot of pressure on the market, Francine.
And we just lost 2%. We are out. We're finished today. Just getting wrecked. Could not get any entries here. Missed this entry.
The ECB and the
Entered here too early.
the same later today as rising oil prices, coupled, of course,
Rotation.
joined by Vincent Mortier, he's Chief Investment Officer of Amundi, and he's with me now. Mr. Mortier, thank you so much for joining us. It feels like the energy complex is upending everything. The markets are still staying quite cool. I mean, they have days of volatility, but how does it change your investment strategy going forward?
Well, I would say the next coming days will be very key to define.
We're not trail this. This is the one I'm supposed to trail to break even. Now it's gonna leave.
Logical or completely?
It depends on which markets. I mean, a short-dated oil and gas shock.
We're not gonna give any entries now. It's leaving.
Pointing to normalization by summer or September. Rates a little bit higher because of inflation expectations, but the curves also flattened because of stagflation possible, so lower economic growth, and equity markets have decided to look through to say to be short it. Now, since yesterday, and all the news flow happening, there is some dust coming.
We lost 2% today, and we gained 1%. So
and we have seen
negative 1%,
gold underperforming,
which we can get a 2% gain. Will be up for today.
So not a safe haven at all. Equity markets starting to correct slowly from a high point, but so a risk-off environment, but not unfolding the way we were used to. So to navigate is not easy.
Yeah.
I continue to believe that the parties involved will have an interest to find a solution, but the new thing in the equation is that the capabilities which has been
Gold looks pretty strong here.
take lots of time to rebuild.
But so what I struggle sometimes to understand with the market, certainly in this period, is that they thought there would be a quick resolution, and geopolitically, there was no quick resolution that we could point to. So, what is the market pricing in now? A protracted energy crisis, or still like a medium-term solution that's foundable?
Always entering too early. Did not wait for the swing, and another bull candle for entries. Now I can try to get in this wick here.
Between China
Active value. We can get some value entries.
on the situation, Iran, which will be depleted of financial and weapons, and US, of course, that the political cost will start to become high, and Europe is hit very hard by LNG prices. There will be a convergence of interests to cool down. The issue is that it's not one single party who can decide. It's not the US who can say everything is over. So we need to find a coalition that will solve the issue. There is a Strait of Hormuz, but we see in the last 24 hours that it goes beyond. There are all the political capabilities.
So what does it mean for central banks? Again, and there's a big difference in, what people are expecting from the Fed or what they're expecting from the ECB, but it's still fundamentally the same problem, which is a higher oil price.
Absolutely.
And whether the central bank looks through it or not.
So honestly, I don't. It's one of the toughest jobs around to be a central banker today, because you have two conflicting forces. So you've got indeed headline inflation, which will go up for sure. Core inflation, it remains to be seen, because in Europe we continue to import deflation. So core inflation might not rise that much, and growth will be softer from a low point in Europe. So if I were in the shoes of the Christine Lagarde, I won't hike, because the growth is too fragile.
Yeah.
And the inflation spike might be short-lived. So I don't believe ECB will want to break the European growth. Fed is another dynamic, but we believe as well that Fed will continue to cut rates, maybe later, but they'll continue. There are many reasons to believe that. And yesterday, actually, the FOMC minutes were opening all kind of scenarios. So nothing very.
So what happens to dollar, actually, in your scenarios? And we saw, I think, dollar strengthening a little bit. If it weakened more, this could be problematic for the euro.
Yes, so indeed, dollar should have.
Waiting to take a swing on gold here.
So it is also showing that there are some underlying forces at play, which are pointing to weaken dollar at trend. So it is a scenario, the dollar is overvalued. And if the Fed cuts and ECB is on hold in the next semester, then US dollar will continue to soften in a context where the US deficit remains outsized. When you got 6 or 7% deficit on public spending, there is no other way out if you want to keep rates under control to soften the currency. So that's why we believe US dollar will continue to go down, and we are positioned for that. Short term, of course, it can strengthen a little bit, but actually, the moves on US dollar has been quite soft.
So how do you construct your portfolio right now? How much risk do you want in there, and where are your safe havens?
So our big conviction is to max diversify our portfolios. So we believe emerging markets have been hit too much, and there is a long-term value to be captured in Asia at large. India is very cheap today. It used to be expensive. It has become very cheap, very under own. China as well. Europe, we should not despair for Europe. I mean, there are some interesting situations. And so it's diversification in terms of countries, in terms of size of companies, of sectors. We don't want to put all our bets on US mega caps, for example, and also to diversify in terms of currencies. We believe that it's very important to protect against the weakening of the dollar. We have just added some short-dated bonds.
Okay.
Because we think the market is too extreme in pricing hikes, in particular in Europe. So we bought recently quite a lot of 2-year dated bonds, and I think we perform a lot. And so
what Europeans are German, French, Italians, or German specifically?
It's more Germany, Italy, Spain, and France to this extent.
Is there anything you buy in the UK or in Japan or these idiosyncratic stories?
Japan is an interesting story, actually. We think the Japanese yen is very undervalued. UG will hike later on. And in the context, we believe to have unhedged Japanese exposures can be an interesting story. And short-term rates can go up. We don't believe JGB, so 10-year or above, can go much higher. So we quite like the 10, 20 years JGB unhedged. I think it can perform quite well. UK is more debatable. We debated a lot. We have a long position on the gilts, which has not performed that well, to be frank. But we have kept it. So we believe BOE will be on hold for quite some time. And in that context, for the carry, gilts are quite interesting.
Okay, one thing that you'd be selling right now that maybe you liked in the last couple. So either something that you think is undervalued or in the markets, or that you'd like to sell.
Yeah, in terms of undervaluation, we have added short-dated bonds, gold. We continue to add gold.
Okay.
The underperformance of gold is a bit surprising, I would say. Emerging markets at large, equities, LATAM, Asia, local currency bonds, which are very cheap now for some countries. And what we find overvalued is still the tech sector at large. Not all the tech sector, but many players.
Range
These things that will happen. It will be fast and furious, and the markets has not yet repriced everything. And there is a little complacency here. There won't be winners everywhere at all. So we have diversified away from the mega tech names in US, but elsewhere as well. So this is this segment of the market where we are a little bit concerned.
Vincent Mortier, thank you so much for joining us. That was, of course, the Chief Investment Officer of Amundi, and we'll have plenty more throughout the day here in Paris. Coming up, we speak to Katie Koch, the Chief Executive of fixed income focused investment firm TCW. That's coming up next, and this is Bloomberg.
Turn heads in the totally redesigned Subaru Outback. Dog tested, dog approved. Get special offers from the best overall and most reliable auto brand during the Subaru A Lot to Love event.
Earn an online MBA recognized for real salary growth at Wake Forest.
Everything I love about Welch's fruit snacks, now with no artificial dyes. A snack parents can feel good about and kids can't get enough of. Welch's fruit snacks, made with real fruit and without artificial dyes.
Why spend hours on complex video platforms? With the upgraded Canva video editor, we've made it easy to edit your soon-to-be viral content. Just drag, drop, and adjust.
You have to come to that. This is The Pulse. I'm Francine Lacqua here in Paris for the Bank of America Global Investor Summit. Now, turning now to fixed income markets beyond the geopolitical and inflation uncertainty, the world of private credit has been under scrutiny recently as investors worry that some firms are overexposed to software lending. My next guest argues that credit remains investable, but this is not a buy everything market. Joining me now is Katie Koch, Chief Executive of the TCW Group. Katie, first of all, I'm so happy to speak to you. So thank you so much for coming here. Look, if you look at credit in general, but actually we've seen a little bit of a difference. The spreads have been widening, right, for both corporates and fixed income. Is that a good thing? Is that healthier?
Yeah. It's the entry again.
First of all, spreads haven't widened that much yet in credit. We're hoping more in the news flow today will probably drive that. Overall at TCW, we're actually underweight credit.
Give us another entry here. It can come swing down. Need a swing back. Is a wick or some value level.
I mean, how do you see the news flow actually impacting the world?
It's this rotation. It couldn't hold this.
Depending on which part of the market you're in.
That's right. I was actually thinking about you on the way here because the last time we saw each other, you might remember this, was at
Got wrecked today.
We feel so cool.